So I want to talk to you guys about how you can possibly buy a HUD-owned home for as little as $100 out of pocket. Yes, you heard that correctly, only $100. So just stay with me and I'm gonna break it all down for you, including exactly where to find these homes. So as you guys already know, there's been a lot going on with the federal government. Employees have been getting laid off, programs have been getting terminated, and contracts have been getting canceled. And this has pretty much been happening throughout the entire federal government. In some departments more than others. And one of the departments that has been experiencing some of this is the Department of Housing and Urban Development, also known as HUD. Now, HUD is responsible for addressing housing needs in this country, which probably makes them one of the most important departments in the government, whether it's dealing with homelessness, whether it's dealing with affordable housing, whether it's dealing with rental assistance or community development. HUD covers everything to do with housing, and they have a lot of programs that focuses on these housing issues. FHA is actually under HUD, and they're responsible for making home ownership more accessible and affordable, especially for first-time home buyers and people with limited savings. They do this by offering lower down payment requirements and easier credit qualification standards to qualify for a home loan. They pretty much partner with lenders who then offer loans for home buyers which are insured by the Federal Housing Administration. These loans typically come with a down payment requirement as low as 3.5% of the purchase price, with a credit score as low as 580. But there are certain circumstances where you can get approved for a FHA loan with a credit score as low as 500. You'll just need a down payment of about 10% of the purchase price. And how much money you're approved for depends on your debt to income ratio. So the amount of debt that you're in is compared to your income. With FHA loans, typically your monthly debt payment should not be more than 43% of your monthly income. So if your monthly gross is $5,000, then in order to be approved for an FHA loan, your monthly debt payment cannot be more than 43% of $5,000, which is $2,150. And the mortgage payment is included in that $2,150. And then there's something else. The mortgage payment can't be no more than 31% of your monthly income. So your monthly mortgage payment, which includes principal, interest, taxes, and insurance, can't be over $1,550. So in other words, that means that your other monthly debt can't be over $600. The $1,550 mortgage plus the $600 debt payment. And that gets you to the max total debt payment of $2,150. And with FHA loans, another expense that's included in the mortgage payment is the mortgage insurance premium, also known as MIP. Now this is a fee that's included in your mortgage, which is paid monthly for the entire life of the loan. So if it's a 30-year loan, then that fee gets paid every month for 30 years, unless you refinance to a conventional loan. Now at one point, they only require you to pay MIP up until you had at least 20% equity in the home, which is how it is with conventional loans. But now the MIP payment is for the life of the loan. And it kind of sucks because the MIP payment doesn't help you at all as the buyer. It's strictly to protect the lender against losses in case you default on the loan. So it's insurance for them that you're forced to pay. So when it comes to the lender determining how much home you can afford and approving you for a total loan amount, all of these fees play a factor, including other factors like the current interest rates, whether or not you'll end up getting a house in a HOA or condo community, because that's additional monthly fees, whether or not the home is located in a flood zone, because then you'll have to get flood insurance. One time I bought a house in a flood zone and didn't realize it until about a week and a half until closing, so I had to hurry up and get flood insurance, which ultimately increased my monthly mortgage payment at the last minute. So all of these could play a factor. But either way, with all that being said, FHA loans still make it easier for home buyers to qualify for a mortgage. Now, the newly appointed HUD Secretary, Scott Turner, is making major changes to HUD. A lot of his changes are mimicking those mentioned in Project 2025. And in Project 2025, as it pertains to FHA loans, it suggests making changes that would ultimately make it harder to get an FHA loan, suggesting that there should be an increase in mortgage insurance premiums for all loans over 20-year terms. Now, this change would affect the majority of FHA loans issued because the most common FHA loan term length is 30 years. Shorter duration loans mean higher monthly payments. And with home prices pretty high, along with high interest rates, a lot of people can't afford to take home loans shorter than 30 years. So an increase in mortgage insurance premiums, which again isn't helping the buyer at all, would definitely make it harder for people to qualify for FHA loans. And it's obvious that if HUD implemented this, then they must want to make it harder for people to qualify for an FHA loan. Even though it says that this would be done to encourage wealth building home ownership opportunities, which can be accomplished best through shorter duration mortgages. But if people can't afford to get their foot in the door of home ownership, then there won't be any wealth building opportunities. Again, MIP is strictly for the lender's insurance, which FHA provides. So if a home buyer defaults on the loan, the lender gets the rest of their money back from the Fair Housing Administration. So it's no loss to the lender. They're not taking any risks. They don't even have to pay for their own insurance. And this is why ownership of the home wouldn't be transferred to the lender in the event of a foreclosure, like it would be with a conventional loan. Since the lender got their money back, the home is transferred to the Federal Housing Administration. And that's essentially how how homes become HUD homes, foreclosed homes that had FHA loans. So how exactly can you buy these homes for $100 out of pocket? So HUD has a program, the $100 down payment program, and it allows qualified buyers to purchase HUD-owned properties with only a $100 down payment, which is a huge difference than the typical 3.5% down payment required for FHA loans. Now, when it comes to purchasing a HUD-owned home, there are some advantages and then there's some disadvantages. One of the biggest advantages outside of the low down payment is the fact that usually HUD-owned homes are sold at a discounted price. So you'd more than likely be able to purchase the home lower than its actual value. In real estate, it's always a good feeling to buy a house that already has equity in it from the day that you close. Another advantage is, in order to qualify for the $100 down payment program, you have to live in the property for at least a year. And I call this an advantage because at least home buyers won't have to compete with investors. If investors want to purchase, they'd most likely have to pay a 20% down payment. But priority is given to individuals who are purchasing as their primary residence. Now, if an investor is willing to live in the property for at least a year, then they'd be eligible. I've used that strategy a few times, but most investors aren't doing that. Now, as far as the disadvantages, HUD homes are sold as is. So that means that it would be the buyer's responsibility to make any repairs if any are needed. Now, if the house is in terrible shape, it may qualify for a FHA 203K loan, which is a loan program that will help you finance repairs and improvements for the home. So pretty much the loan amount would cover the purchase price of the home and the repairs. This could be a great idea if you find a property that you want in a neighborhood that you want, but the property needs some work. You're able to pay to have the work put into it, and eventually you have a completely remodeled house. Now, of course, you'd have to use a licensed general contractor to handle the repairs and the improvements. Can't just go in there with you, your Uncle Ray Ray, and your cousin Pookie, thinking y'all gonna be the contractors for this project. Nah, it don't work like that. Before the loan even closes, the lender will need to know who's the contracting company that you're going with. They'll want to see the scope of work and how much the work will cost. Now, along with the $100 down payment, you also have your closing costs. Closing costs for a buyer usually can range anywhere from 2 to 5% of the purchase price. But the good news is that you can still receive grants and closing cost assistance to help pay for those costs. Whether getting grants from the lender, the city, county, or state that you're in, make sure you have your lender explore all of your options. I just recently had a buyer. He didn't use this program. He actually used the conventional loan, but he purchased through the Section 8's home ownership program, and he got about $50,000 towards closing costs and the purchase price of the property. And I believe all of those funds were forgivable. So in a sense, that's just free money that went towards his home purchase. And it always feels good to get free money. Now, there are a couple other requirements when it comes to purchasing a HUD-owned property. You must use a HUD-registered real estate agent to participate in this program. An agent, your broker would need to be registered with a name and address identification number with HUD. And you'd use their NAID number and your license number. And then you'd be able to represent buyers using this program. And 2, home buyers cannot have purchased the HUD-owned property in the past 2 years, which most people probably aren't going to have to worry about. Now, to find HUD homes available for the $100 down payment program, use the link pinned in the comments, which is also in the description. So if you're interested, make sure you guys check it out and see what's available in your state. I hope this video was helpful. Thank you guys for watching. And as always, can't wait to see you guys in the next video.